Hey everyone, it's John Pinton. It's the last week of July, and I have some big news to share with you all. Interest rates are going to be going up again this week or next week. The Canada 5-year bond yields are rising dramatically from 3.8 up to 4% today. Why? Well, the overnight rate just went up another 25 basis points yesterday down in the United States. They feel like they need to continue raising the rate to keep inflation in check down to 2%. It's the lowest it's ever been in the last 2 years, hovering around 3%, which is just a little above Canada, where we're at 2.8%. So in last week's video, I discussed on how I think there should be a pause for these interest rates, since it's evident that inflation is coming down overall dramatically, from 4.4% for Canada back in April down to 2.8% for June. And then let's see what happens in July and August. I'm most likely going to see inflation reports coming down lower than 2.8%, with energy prices falling about 25% year over year. So it's in general, it's a good picture, but the banks of Canada and the United States are kind of working together, bringing the overnight rates up higher to make sure that inflation does come down to 2%, even though the reports are already showing that inflation is decreasing at a lower rate than it was before. We're still going up 2.8% year over year. We're not falling below zero, but it's just showing you that they want to do everything possible to keep consumer prices tamed down and not let it go up to 6, 7, 8%. So I've been trying to be optimistic, but it's bad news if you are a seller. It's not going to be a good fall with interest rates rising again. So I just want to give you an example. Back in April, May, say for example that you purchased a house for $1.2 million, 20% down, which is required on any property over $1 million. The monthly payment on a $960,000 mortgage, which would be roughly $5,500 a month, has just increased quite a bit in the last couple months. And with this latest interest rate hike coming this week with fixed rates, due to the fact that the Canada 5-year bonds are increasing, you're looking at about an extra $825 per month. So that's a 15% increase. So something has to budge. So if those buyers want to come buy that house that you just bought, say for example you have to sell your house and move away this fall in October, November, you're going to have to take a 10% cut, possibly 15%, because incomes haven't gone up 10, 15% since you last bought that house. So something's going to have to give, and listings are going to go down. But as I saw last fall, the best time to get a good lowball offer actually was back in November, December. That's when I saw the most incredible deals. And then inventory dwindled this January and February, and then it was off to the races in March, April, May this year. So I see a very, very good opportunity coming into the fall. Unfortunately, the rates are higher this year, but everyone thought with 5% interest rates that no one would buy. And look at all the buyers that came out this fall or this spring, pushing up the prices even farther. So now we're going to be pushing 6.3, 6.4% fixed rate coming up to this week, where we're at 5% just a couple months ago. But let's see where we go. If the inventory keeps dropping into the fall, into the winter months, we might see a repeat of next year on a lower scale, and prices might return upwards in January, February, March. But short term, it's looking like we're going to see a drop of 10%, possibly 15% if you have a house valued at over $1.5 million. Probably a 10% drop if it's around $1 million to $1.5. And I wouldn't be too concerned if you own a condo or a townhome under $1 million. Those properties have a huge pool of buyers. You only need a 10% down payment for that. So don't be too concerned if you own a property around $700,000, $800,000, $900,000. The values maybe will go down 5%, but don't expect a 10, 15% drop over the next few months. But much, much higher chance that your house, if you need to sell it, say it's $1.3, $1.7 million in Maple Ridge, Surrey, Langley, Burnaby, buyers coming in are just not going to be able to afford what people were paying just a few months ago with these fixed rates up to 6.3, 6.4%. Right now we're at 6.2% at most of the banks, but we will see an increase over the next week here due to the fact that the Canada 5-year bond yields have risen dramatically due to the fact that the United States Federal Reserve just raised the interest rate 25 basis points. And so that might give fuel for the fire for the Tiff Macklem and the Bank of Canada governor to raise it again to keep in check, in line with the same rate as the United States in September. But hopefully we can see some good inflation data in the next 2 months here and prevent that from happening. And then if it doesn't go up in September, it'll probably level off. The price drops coming this fall. But if there's another increase this September, all hands on deck for a full 10% drop on detached homes in the Lower Mainland. But don't be too concerned if you own a condo around 600,000 to 900,000. You should be okay. And so I just want to give an example. We're very polite here in Canada, and I see it myself all the time that these listings can stay online for months if it's a little overpriced or if there's just no one interested. And some people are afraid to make it an offer if they just don't want to offer what they want to offer. So, for example, there was this house that I helped some clients with in February, just before they paused the interest rate in March. So it was a very uncertain time, and we didn't know which way the market was going, but it was leaning towards a pause. And they were bang on. The market just roared into March, April in Vancouver, and my clients found a beautiful house in Mount Pleasant of East Vancouver with 2 rental suites, and it was asking $2.2 million. It was built in 1994. It was in solid house, but obviously overpriced. The assessment value was around $2,030,000. So definitely overpriced, but it was on the market 200 days, and no one was making bids on this. And so we came in and we offered $1.935 million, $265,000 less than the asking price, and we were successful. And we won the bid. So it just goes to show you have to try, and don't be concerned if you're looking at properties that are half this amount. Even if I have another example, even a condo that was asking $1,150,000 in North Vancouver a few months ago for another client. They had an offer deadline day. We came in. We offered $1,070,000, $80,000 below. Now they didn't accept it right away, but they came back to us a week later and they did accept it. So we got $80,000 below the asking price, and that's a different, whole other price range. So don't be dismayed to make a lowball offer this fall. It's just going to get started. Sellers probably will be hesitant in August because they've seen their neighbors sell for higher prices in the last few months. But as I've said in past videos, the most prime opportunity of all the year is September to December, because there's a reason why they're selling. There's desperation. It doesn't make sense to put your house on the market in September and move out in November, December, in the cold, rainy, dark months of the fall, winter. So just think to yourself, there's a reason why. So if you see a house for $1.5 million, come to me. I'll help you negotiate an offer. Could even get $150,000 off the asking price, depending on where they are in the market. If they've been in the market over 45, 60 days, there's a chance. So that's what you want to look for. You don't want to look for a brand new listing. That's how you find usually good deals. Houses that have no pictures or just a couple pictures. If they look like terrible pictures, probably a good chance to negotiate because not many people have come through. So things like that can help you beat the competition and get a lowball offer accepted. And high chances, if it's over 1.5 million, that you'll be able to lowball at least 100,000 going into this fall. If it's asking 1.8, 1.7, and you offer 1.6, 1.7, you'll probably win. Not now, but wait till probably middle of September, October. It could happen. So especially with these interest rates continuing to rise, there's more uncertainty coming, and we won't have a definitive answer until September. So even though the inflation data might come down more in July and August, it doesn't mean that the Bank of Canada is going to pause the rate in September due to the fact that even with the inflation data down in the United States, they still raised the rate a few days ago, even with brand new data showing that inflation has come down dramatically. So you have to keep that in mind. And unfortunately, it's dismal news if you're a seller going into the fall, but there's always reasons you have to sell. And obviously prices rebounded quite strong. This spring, they came up another 10, 15% for detached houses, and they're going to come back down most likely with these rapidly rising fixed rates coming into the fall here. And variable rates have obviously come up to above 7%. So fixed rates just trailing behind, but catching up quite quickly here this week, since the bond yields have gone from 3.8 up to 4% right now, and they were just at 3% back in June. So massive drop in buyers. The real estate market is super slow right now, and this is the time to get a deal. As I said last year, November, December, the fall, it's looking like it's going to be the best time again. when it's dark and rainy, and the rates will still be high, and people won't be able to afford what people were buying back in April, May, June this year. So, one caveat, it might keep listings lower than normal, so that might keep the prices from dropping too much. But even with low amount of listings, people are still going to have to sell, and there just won't be enough buyers this fall, in my opinion, to buy that house for 1.3 million out in Maple Ridge, or even that townhome in East Vancouver for 1.1 million. That might not even sell. So only things that are looking good right now are condos, where you can buy them and rent them out, and rents are going up astronomically, and they're covering the full mortgage, whereas before they weren't. So one bed condos are something really to look at, and a lot of workers are moving back downtown. Amazon headquarters, I think, opened up, or it is about to, this fall. So one word of advice: investing. If you want to buy something with your cash, go buy a condo in Mount Pleasant Olympic Village, where I've always suggested my clients to look. And also downtown Vancouver is a good option as well. But less so. I stay more towards Kitsilano, Fairview, Mount Pleasant area. And if you can find an Airbnb condo where there's only a couple, that would be even better, because then you could charge nightly rentals of $250, $300 a night, and you only have got to rent it out 10, 15 nights a month to making a pretty penny on that. But only a few condos that I suggest my clients to go with. And reach out to me if you have any questions regarding Airbnb condos. But in general, just want to give you an update on the fixed rates will be going up again. I'm sorry, bad news if you're a seller, and the bad news if you're a buyer too, because it makes it more costly, but it gives you more negotiation power to come do those lowball offers, which we were seeing last fall and up until February, where I was successful on getting a lowball offer accepted for $265,000 below the asking price. Mind you, the assessment was around $2,030,000. We got for 1.93, so we still got about $100,000 below the assessment value. But if you came in today, you probably have to pay an extra $100,000 over what we paid for. But let's see what happens with these rates going forward. Hopefully, they don't raise the rate in September. But if they do, it's going to be a dark fall for sellers, and buyers might stay in the sidelines waiting for rates to drop. But don't wait. If it might be advantageous to go lowball and get a lot of money off, and then because the prices will start rising most likely next February, March, with inventory dropping again this winter, with not many people selling, and with more cases to show inflation coming down to close to 2%, it might become very, very positive next spring. Just a snapshot of what we saw this past winter, where it was dull and gray, not much happening. Then suddenly, out of the blue, it started getting crazy in the real estate market. We saw multiple offers everywhere, and right now, no one's thinking multiple offers will happen again anytime soon. With these interest rates at 6% and climbing, but this is the time to come in before the crowds come back and start competing again, and go offer low, and you might get a good deal. If you have any questions, leave them in the comment section down below. Subscribe if you haven't done already. Hope you're all enjoying your summer, last week of July. I'll see you in the next video. Thanks, and have a great day.